In today's video, we're going to be comparing the three largest tobacco company stocks based on market cap, which are Altria, Philip Morrison International, and British American Tobacco. Tobacco stocks are really popular among dividend investors because they typically offer much higher dividend yields compared to other consumer staples. Not to mention they're pretty popular right now because they're typically seen as being more defensive during harder economic times. People typically still want their cigarettes and their alcohol no matter how bad the economy gets. We'll be looking at these three stocks using a variety of different metrics and looking at the financial performances to determine which is the best dividend stock in my opinion. So with that being said, let's go ahead and get started. For starters, Altria, ticker MO, is a holding company that broke off from Philip Morrison back in 2008 due to investors wanting higher dividends and more share buybacks. So if you look on Altria's website, you can see that they own Philip Morrison, ticker PM. Philip Morrison provides cigarettes primarily under the Marlboro brand, cigars under the Black & Mild brand, and moist smokeless tobacco. As of last year, Philip Morrison controls about half of US cigarette sales at roughly 48% of the market. Altria also holds a variety of financial assets and investments, including a stake in Kronos Group and AB InBev, which is the world's largest brewer. They also hold a large stake in Juul, which is really going up in smoke, no pun intended. British American Tobacco, on the other hand, has a much larger global presence. Although they only control about 12.2% of US cigarette sales, they're the largest tobacco company in the world based on net sales. Here in the US, they own the cigarette brands Camel, Newport, and American Spirit. More recently, they've been pushing their non-combustible tobacco products, which is anything that doesn't require burning the product for consumption. Some of these brands would include Vuse, Glow, and Velo, which are in pretty much every American convenience store I've ever been in. Just like Altria, BTI has also been making strategic investments in other companies, with them recently investing in the Canadian-based weed producer Organigram. Let's start by looking at each company's dividend yields. Altria currently offers the highest dividend yield out of the three at 8.45%. Coming in second place is British American Tobacco, which currently offers a 7.51% yield to shareholders. Philip Morrison is the lowest yielding tobacco stock at 5.87%, although this is still considered really high for any consumer staple stock. When we look at the 5-year dividend growth rates for these stocks, the rankings are still in the same order. Altria leads with a 5-year dividend growth rate of 7.89% according to Seeking Alpha's data. It needs to be noted though that British American Tobacco switched from paying semi-annual dividends to quarterly dividends back in 2017. They also pay a varying dividend amount, and what I mean by that is what they pay varies from quarter to quarter, unlike MO and PM. Altria is currently a dividend king stock, meaning that they've been able to grow their annual dividend amount every year for more than 50 years and counting. Philip Morrison hasn't been around long enough to even be a dividend aristocrat, but they have increased their dividend every year since branching off from Altria back in 2008. BTI is currently not a dividend aristocrat as their dividends have only been increasing for the last 3 years. Going through their dividend distribution histories, we can see that none of them ever really pay special dividends, so no company stands out in this area. Looking at the share price performance of these stocks, this year all three of these stocks have performed better than the S&P 500. Again, with the economy faltering this year, people are searching for higher yielding investments to park their money in. But of course, long-term performance is what matters most when it comes to investing. When we look at the 10-year share price performance, we can see that Altria dominates this category. Their stock is up roughly 40% in the last 10 years, and with Philip Morrison coming in second and actually being down 2%. Finally, BTI comes in third at being down 25% in the last 10 years. So just by going off share price alone for these stocks, they haven't been performing too well over the last 5 years. But only their share prices are being taken into consideration with these returns. The biggest factor in investing in these tobacco stocks has to do with the high dividends they provide. In determining the overall return for these stocks, we need to use a drip calculator in order to get a clearer picture of how these stocks have performed. A drip calculator calculates the total return for a stock and includes all the dividend payments being reinvested back into the stock so it can buy more shares. Since all these stocks offer yields of over 5%, using this tool is absolutely crucial when analyzing the returns for these stocks. When looking at the total 10-year return for these stocks, the clear winner when using the drip calculator is Altria. I decided to use the past 10 years returns for this, even though I'd like to go back further. The fact is Philip Morrison has only been around since 2008. This really highlights how powerful dividends can be. You can see over the last 10 years, dividends reinvested into Altria would have provided a total return of 137.06%, with an average annual return of 9.01%. Had you only gone off share price and not accounted for dividends, in the last 10 years, Altria's share price is only up about 33%. So with dividends, its total return is over 100% better. In second place is Philip Morris. As you can see over the last 10 years, your total return with dividends would be 59.23%, which comes out to an average annual return of 4.76%. Definitely not great since this would have underperformed a lot of other investments, but on the plus side, you wouldn't have lost money at least, and these dividends are qualified so they're taxed lower. But still, it's pretty mediocre performance even with dividends being taken into account. Then finally in third place is BTI with a total return of just 26.01% over the last 10 years with an average annual return of 2.34%. Definitely not great numbers here for BTI either. Both of these two stocks have underperformed a lot of other dividend investments out there. But the truth is, up to this point, we've only looked at the past performance of these stocks. As the old saying goes, past performance doesn't equal future performance. Depending on how bad of a recession we're about to get into, these stocks could actually outperform the market for quite a while. So let's look at these companies' financial statements and see how they're doing today. We'll start by looking at revenue growth or loss for each company over the last 10 years. You can see that BTI, which is in blue, is the clear winner here as their revenue has grown by over 46% in just the last decade. Second is Altria with a 20.63% growth rate, and then Philip Morrison is only at a 0.09% growth rate over the last 10 years. In just 2 years, BTI's revenue jumped pretty considerably. I'm not sure why this was the case, as there might have been a pretty sizable event that took place because it looks pretty unusual. But if you notice, Altria's never had a negative year of revenue growth over the last 10 years. It's always been marching upward, which is a good thing. Then as you can see, Philip Morris hasn't really grown much over the last decade, but it's still been able to increase their dividends. Let's now look at their gross profit margins, which indicate the amount of revenue after a company pays for labor and materials. Tobacco companies typically have much higher gross profit margins than other industries. We can see going off this metric that Altria has kept growing their GPM better than BTI has, and Philip Morris hasn't really been improving anything over the last decade. It's actually been getting slightly worse for them. Let's now look at another metric, which is return on invested capital. Another important aspect that needs to be considered is how well the company is using their money in order to help bring in additional revenue. We know that both Altria and British American invest in other businesses to help grow their returns, with both companies investing in weed companies and Altria investing in alcohol too. So we need to see if management is doing a good job picking investments using their cash on hand, as well as other sources. This graph shows that Philip Morrison has actually been far superior when it comes to returns on investment capital at 42.93%. Altria is all the way down at just 6.43% over the last 10 years, and then we have BTI at 4.88%. I suspect one reason why Altria is so much worse has to do with the company buying Juul back in 2018. What seemed like a good investment according to the board, the decision actually backfired when the FDA decided to impose stricter guidelines and harsher regulations. The company actually posted a $4.1 billion loss on this deal in 2020, which had major impacts on their financials. So after looking at everything we've seen, what are the conclusions we can make about each of these three stocks? I think it's pretty clear that Altria continues to dominate every other stock in the tobacco sector. That's not to say that everything else is terrible, but Altria has the best track record out of these three companies in most metrics and financials that we've looked at. What sets Altria and British American Tobacco apart is that they hold a lot of other investments in other businesses to help generate additional revenue. Altria itself is structured as a holding company, and they've continued to branch out into other sectors and markets. So even with cigarette sales on the decline, it's how Altria has been able to keep increasing their revenue year after year for over a decade. BTI also does the same thing, only on a more international scale. But they just don't have the revenue growth that Altria has. But with Altria's track record, especially with their dividend distribution history, they're my favorite company in this sector. But from what I saw, I didn't see any major red flags in the other two companies we looked at. But these are all just my own personal opinions, and be sure to perform your own research and due diligence before making any investment decision if you do decide to invest in any of these three companies.